Hi there. Welcome to another episode of the Digital Insurance Pint podcast. I'm Tom Reed. As always, I'm joined by Adam Mitchell, CEO of Mitchell & Whale, Jeff Roy, CEO of Excalibur Insurance, Steve Earle, CEO of Cheap Insurance, and today we have our special guest is Paul McDonald, Executive VP of Economical Insurance. Paul, how's it going?
Not sure how special I am, but I'm definitely a guest, so welcome.
Yeah, good start. Good start. Hey, Paul, just so our listeners get a better sense of you, can you give us a quick background on your career?
Sure, yeah. After I graduated from law school, I articled, got called to the bar, and then immediately thought better of it and went straight to the best industry there is, which is insurance. So I'm one of the few that specifically chose this industry, and I started off actually at Aon as a specialty lines broker. So I was at Aon for almost 10 years. Then I wanted to broaden my insurance experience and went to PwC, did some insurance consulting for a number of years, which was fantastic. Got to work with a lot of good companies across Canada. And then I went insurance company side. I went to SGI out west, which was really an interesting experience. Being a government-owned entity, it was quite different. Then RSA, where I worked for Rowan, and now most recently at Economical. So here I am.
Awesome. All right. First, I think you're the first lawyer on our show, so we'll definitely not be making that a habit, but
and the first person that admitted they wanted to get into insurance, they actually admitted it. So Paul, that's pretty good. Your honesty is incredible.
Yeah, there aren't that many of us. Most of us are accidental tourists that loved it and stuck with it forever. But I did it deliberately and have loved it and stuck with it deliberately. So
awesome. Let's get to know you a little bit more. So I'm going to ask you a few questions about sort of you and your interests. So first off, what is your favorite Canadian band of all time?
Well, I went to university in Kingston, and my wife is from Kingston, so I think the politically correct answer is Tragically Hip.
Paul is fully, completely. So there you go.
Approved.
Okay.
Yeah.
No more political correctness, though. That's the
no. I loved it.
That's awesome.
Okay, which beer did you open up there to?
Tall Ships, Garrison. From the East Coast. I went to law school, and I did it out in Halifax. Loved my time there and have a real soft spot for the East Coast, and love the beer out there too. So happy to be participating.
Well, little flashback there. Awesome.
Yeah.
All right. Next one here. Fill in the blank. If I was elected Prime Minister of Canada, blank would be legal.
Citizens being able to give traffic tickets. Can't tell you how many times I wanted to pull someone over and give them a ticket, but yeah.
You just pull them over and beat them up?
You have to think the better of it, so I wisely just ignore them and drive on.
You know, in the broker world, I always wish there was something you could scan somebody's license plate just to make sure you never wrote them if they ever called.
Yeah, exactly. Well, I can tell you when I was out west, because SGI did business across Canada, but of course we had a monopoly on auto in Saskatchewan, and so of course every time you're driving around Saskatchewan, anyone that you drive behind, if they're driving like hell, you know you're automatically insuring them, so it's not a very good feeling.
So, Paul, you've been in a few different areas of the industry, so you've got quite a broad network, I'm sure. Who do you most admire in the Canadian P&C industry?
Is that a company or a person that you're asking about?
Either.
Well, it's interesting that there's a lot of good companies. I tend to admire the Canadian domiciled ones the most, because we're smaller players by comparison to those globals, but there's some really good homegrown ones. Obviously, I'm a huge fan of Echo. I think we've done some incredible things. Had a great time at SGI, as I mentioned. CAA, I'm a good fan of, because they're an interesting, well-rounded little organization that has done well for Canadians. And then, of course, Intact, you can't but help admire. The fact that they're a global player, or soon to be a very global player. So lots of good homegrown talent. We're hoping to be, another great Canadian success story into the future.
Awesome. So my final question, the speed round here is, and this is going to stretch your linguistic abilities. Do you know how to say seal in French?
You know, the only reason I know that is because I have an 11-year-old son, and he came home last week and was telling me it was seal in French. And so after I looked it up, I guess I took him out of timeout and said, don't repeat it again.
Okay, so you do know how to say seal in French. You're just not going to say it on the podcast.
Yeah, you can
Is that what you're
guess.
going for? All right. You're
Call
smarter
it
than I thought.
the seal bomb.
You can dub it. You can dub it in later, Tom.
Yeah. We'll dub in the bleep. Okay, so let's get into something a little more meaty here. Echo obviously has been going through the mutualization process. So can you give us an update on how that's going? And has so part B of that question, has the demutualization effort had any negative effect on your brokers?
That's a weighted question. So the first part, I joined Echo 3 years ago, and at that point, I think they'd been going 6 or 7 years at that time. So for those folks, it's probably felt like it's been forever. For me, it's been accelerating pretty rapidly, and so our chair of the board, John Bowie, just recently sent out a statement indicating that we're keen to move forward, and we're looking to have the third and final vote sometime in Q2 of next year, if possible. And then ideally, again, depending on the outcome of the vote and OSFI's timeline, we're targeting the fall of next year. So for the actual IPO. So that's pretty exciting. We're now, getting down to within a year, if all things go as planned. And I think it's a great thing for us to be going as a Canadian entity. As I mentioned earlier, Intact's really the only Canadian public company in the P&C space, and we want to be the other one. We want to give them a run for the money. I think it's good for brokers to have alternatives. I think it's good for brokers to have strong Canadian companies with a real focus and expertise and stability in Canada. And I think becoming public gives us access to certain things that allow us to keep getting bigger and stronger and continue to be a support for the brokers. So I'm hopeful that it's a net positive for brokers in Canada.
Great. Is there any truth to the rumor that every share of Echo in the fall of 2021 will come with a free COVID vaccination?
I think
you don't have to answer that question.
I think we're hoping every share of every company next year comes with a free COVID vaccination, to be honest.
Yeah, for sure.
Right.
Echo was one of the first companies to implement a full Guidewire system. And I think the term used was kind of your version of a moonshot. And I think a really wise person at Echo said that. And basically, you were a big part of the transition. So how did you come along with the decision to implement Guidewire? And what challenges did you hit along the way? And what have you learned from the experience of going through it?
Yeah, I mean, a huge amount. And this is one of those things, like, I'm aging myself a little bit, but I keep saying that that Guidewire is kind of like, the VHS Betamax award that happened a number of years ago. There are lots of vendors that can provide it. Guidewire, I think, just did the better job of getting out first and connecting with a lot of other companies and providers. And that gives benefits to anyone who jumps on as part of that network. So I think that's why the organization selected Guidewire. We went with policy and billing. We're working on claims now. But I think really the moonshot component was the key differentiator. It's not just a back-end system that we wanted to put in. We really wanted to do it differently. And we met with our brokers. As a former broker myself, it used to drive me crazy when companies came to me and said, oh, look, we've created a portal. And I was like, great. That's yet another system I have to re-enter information into. And so we listened to our brokers, and the broker said, don't do that. Don't create yet another broker. Make it easier for us. Connect to us through APIs, and in that way help us get more efficient as well. And that's what we did. It was a bit of a challenge in terms of nobody had done it before that way, and certainly not in Canada. And so we had to learn as we went. And I got to say that we could not have done it without the brokers' support. I mean, they helped us design it. They helped advise us. They helped, point out the problems, and they stuck with us through it. And as much as it was a bit painful to go through, I would say by comparison to some other executions of it, it actually went relatively smoothly. And I'm glad that the majority of that is now behind us. And so now we're transacting, and it's working quite efficiently.
That's nice. The Vyne system and I guess the Guidewire whole back end really lets you go in for rate changes in a much quicker way than ever before. And in 2020, you guys had 10 times the rate changes than you did the previous year. What's your thoughts or comments on that?
Yeah, I mean, I joined in the beginning of 2018, and at that time we were doing less than a dozen rate changes across Canada. When you compare that to the rest of our competition, we were pretty far behind. And in part, it was because we were focused so much on implementing it, we had to take a pause. But it has given us that ability to move much faster, and we are, not quite 10 times, but almost that in terms of the number of changes. And it's a necessity. 19 was a hard market like crazy. We almost forget that now because 20 was the pandemic. And so all of these changes are occurring so rapidly. We've got reforms coming through in multiple jurisdictions, and regulators are allowing different kinds of pricing structures. So we got to respond really quickly to that. I know that seems quite painful to all of us in Canada, but when you look at other jurisdictions like the UK, for example, they do daily rating. So conceptually, it's not that difficult or unheard of. It's just, the structure in Canada makes it kind of tough. And so where it would take us 3 months before to do a rate change, now it takes less than 2 weeks. That's probably still not fast enough. And we got to respond faster, and that allows us to respond to broker demands faster. On the flip side of that, though, it does put a little more pressure on brokers to keep up with what's happening, because the brokers are going to be faced with a multitude of rate changes from every single company. So this, again, I think this is why it forces all of us to move to a much more automated mechanism in the industry. Otherwise, we just collectively won't be able to keep up.
Sort of
Paul,
like APIs.
Yeah,
absolutely.
but Paul, I think that brokers, we can handle rate changes at renewal. I think the friction is really caused when rate changes are pumped through and they're implied on endorsements. It really creates chaos when you have customers that call to decrease coverage or make a change that should result in a premium decrease midterm, and rate change the endorsement is processed, but now the new rates are applied midterm. And the premium actually goes up. We've seen many, many instances of this. So you can get rate faster, but if you're doing it on endorsement as well, rather than at renewal, it's a big challenge for brokers. How do you explain, I've removed collision, I've increased my deductible, and my rate's gone up midterm?
Yeah, I think that's more of a function of the systems and how they're designed. And really, the systems are designed to try and keep currency. And so as long as you don't touch the system, it'll maintain whatever rate you most recently put through. But as soon as you have a transaction, it may seek to apply the most recent rate. And so that is a bit of a design challenge, I think, for all of us collectively. As all of us, as the entire industry moves to much more modern systems, they're much more technically complex, and we're going to have more and more of these kinds of challenges. I mean, I think we saw a little bit of that throughout the pandemic, even with relief measures. And you'll see, we took a bit of a heat as an industry for having such a wide variety of relief measures. We didn't get together like the banks didn't come up with a consistent approach. And part of the reality for that is we're all on different systems. And so for those of us on very old systems with manual processes, they could process rebates right away. For those of us on modern systems like we were, we program changes months ahead. And part of the guarantee to brokers is we give you those renewals more than 60 days in advance. But the problem with that is what happens if you want to process a change within that 60-day period? So it is something that we're aware of. We're going to have to keep working at it, I think, collectively, and figure out.
Yeah, it's a guide
to customers.
It's a Guidewire issue because we see it out of other Guidewire companies too. It just the number of the amount of midterm remarketing we need to do now as brokers because an endorsement has resulted in something catastrophic to that over the original price that the insured agreed to it's more steps and extra friction.
It is. It's
no
a
response
challenge, but
required.
of course, it's a challenge when prices are increasing and markets hardening. It's not such a challenge when it's going the other way. So in soft market conditions, the customer gets a net benefit right away, And so obviously brokers won't have to do remarketing at that point. So, you know, it's the ups and downs are magnified by these systems.
Good point.
Yeah, magnified by COVID and a hard market on top of that. So
Yeah.
it's just been a layer upon layer upon layer. You know, I know one of the challenges when you had the system when you came out with Vyne is that you couldn't really change it until you fully deployed it. So you couldn't adjust the rating for a period of time, right? So you had to take a little more rate in 2019 to be able to play kind of catch up, right?
Oh, that was tough. That was like you're mid-flight, and you know when you land, there's going to be a whole bunch of things you need to change, but you can't help it. You still got to keep flying that thing until it comes time to land. So the biggest challenge for us particularly was we timed it, not obviously deliberately, but when we landed with deployment, it was right at the beginning of that hard market, and we were really far behind, so we had to play rapid catch-up, which was unfortunate. But as I said, the brokers really stuck with us, and we explained it and managed to get it through. So I couldn't be more grateful for that support.
Awesome. Well, let's keep talking about technology.
Sure.
and brokers. I mean, obviously, Echo spent a lot of money on Guidewire, and you've also, as a related thing, you've spent a fair amount of money developing APIs for the broker channel. Can you tell us why you did that and why you did it, what you're trying to achieve, and is it working?
Yeah, and again, I think part of it stemmed from the initial sort of innovation around Sonnet, which was around, can we automate underwriting? Can we make the process so quick and efficient that you can bind essentially immediately with that initial transaction? And it was a bit of a test subject. And the real innovation in my mind was then saying, how do we bring that capability to the broker channel? How do we make the broker experience as efficient? And based upon that policy and billing system, as I mentioned, we not only automated the underwriting, but we made those connections. And so it forced us to have those discussions with all of the BMS vendors, all the major ones, the rate quoting vendors. And that was a lot of work and expensive work because it hadn't been done before. And I think the proof's in the pudding, because during COVID in particular, when everyone's working from home and brokers had to do unprecedented levels of extra work and remarketing, here was an opportunity for brokers to access our systems from their house if they needed to, even when their own systems were down. And it allowed brokers to transact 24/7 if necessary, and allowed brokers in many cases to bind, almost immediately within that 5-minute transaction. So I think we really led the way in terms of improving it. We recognized early on that there's a ton of frictional cost in the insurance world. And I don't know why we're all competing on who could spend the most on that extra cost, when reality is, let's all compete on providing advice and support for customers and get rid of all that frictional cost. I'm a big proponent of that. I look at the banks who have gotten together and said, let's do bank machines together. Let's do online banking. Let's do credit card processing. I think too often we rely on these anti-competitive rules in insurance to prevent us from actually doing what's best for the industry.
I agree completely. Like technology, especially infrastructure technology, connectivity, and so on, if that's treated as a competitive advantage, it actually is, in my mind, harmful to the broker channel. Right? You can't be connected differently. You have to be connected consistently. And some of the things that we can do in payments and banking and finance and other financial services are so much easier than in the insurance business, because they've gotten over that hurdle. They've said, infrastructure is common, right? We'll compete in our products, our knowledge, our experience, our people, whatever. But at the end of the day, the ability to move, a byte from here to there is not a competitive thing. In fact, it works better for everybody. It's cheaper if we do it the same way. Yeah,
I mean, added to that, of course, is that we're a little different because we've got 10 regulatory environments as opposed to banking that has one. And so we do have an extra few hurdles as an industry. We also have over 100 P&C companies compared to the 4 or 5 banks. So I think we're moving in that direction, but I absolutely agree. We need to get rid of it, because it's not just brokers, it's the insurance companies, it's the vendors, it's the customers. Everyone's paying for that frictional cost, and we don't want to be paying for it.
I still remember vividly when you did the road show and you rented a place in Waterloo. I can't remember the bar's name or the location. It wasn't a bar, but it was a location. And I saw you did a demonstration of Vyne, and I saw the first STP, which stands for me, straight through processing on new business. And my eyes lit up like that's what I've been dreaming of. No portals, no double entry. That was amazing how easy and simple it was and how well it worked out of the box. So I believe, to my knowledge, you're one of the first companies to do that. You're continually building out APIs and investing in technology. What other stuff are you building out? Are you doing some commercial stuff in 21, 22? Is it getting some love? You mentioned is it the claim system? You're doing some work on it. Where's kind of your investment in terms of API building, and what any other technologies you're looking at investing in on top of that?
Yeah, I mean, look, we're going to continuously invest in technology, not just in the BAU, upkeeping the existing technology, because we all know you can't just put one version and leave it forever. So we're upgrading the Guidewire versions. We're putting it to the cloud. We are investing in claims as the next, the leg of the stool for the back-end policy billing claim systems. And yeah, you're absolutely right. Fabi and his team in commercial are really focusing on trying to put some investments in on the commercial side, particularly the small commercial side at the beginning. The reality is we're going to continue innovating and investing. It is rather expensive and can be quite concerning be the first one out. But I do think the more people that get into this, the more it'll benefit all of us collectively. I do think COVID has the benefit of actually accelerating consumer acceptance of digital transactions on the insurance side. We all bought everything, including banking, online, but for some reason Canada was pretty far behind that in the insurance space. Now we're all forced to work from home and everyone's thinking about it, so it's really accelerating that need. And the more that we can keep investing in the digital experience for brokers and customers, with an eye of improving the experience and also reducing costs. If you can keep those two things in focus, we have a good chance of catching up with the banking industry.
Yeah, I totally agree.
Can I jump in on exactly that line on investing in technology? For those who didn't see it, Rowan was on the CEO panel for the IBO convention and interviewed with Colin. He brought up, and I'll read the quote, but he was asked about, will brokers be left behind if they're not investing in technology? And his line was that he didn't want to be an alarmist, but on this one, I think it is almost too late for someone that have not stepped up. What's Paul's take on that?
I think the entire financial institution industry is going to be left behind if they don't invest in technology. That is the way that we're going to be interacting with customers, but also that's the way we're going to be managing our data, analyzing the data, pricing our products. This is we had the industrial revolution, and this is the technology revolution, and it's impacting everything. Who would have thought that one of the biggest companies years ago, we would have picked a bookseller to become one of the world's biggest companies, and now Amazon, is dominating, and they've done it through technology and understanding their business and expanding their business. And look at the other big companies; they're all the biggest ones are all tech plays. We don't have a choice. We're going to get left behind if we don't. So we're trying to help accelerate that in the marketplace, and work with our brokers to help brokers move that. But yeah, I'm with Rowan on the fact that if people are deliberately digging their heels in and saying we don't need to invest in technology, I think they're going to suffer the consequences.
And you mean specific to brokers?
I mean everyone, absolutely everyone. And so brokers, insurance companies, vendors that supply our you think about traditional vendors, even that repair houses and vehicles. They're having to invest heavily in technology to keep up and to keep the rates down and the work accurate. So we're all having to do that. The challenge with technology is really scale. It costs a lot of money, and if you're small, you don't have the same resources to make the giant investments. And so if we have a bunch of very small brokers, mom and pop brokers, which have been the lifeblood of the industry for hundreds of years, how are this very small brokers or the very small mutuals, insurance companies that are throughout Canada, the challenge is how, without partnership, how on earth are they going to be able to afford to invest in the necessary technology? Either that or they have to wait it out until technology becomes so inexpensive and accessible that then they can gain it.
Either that or their broker management system could actually step up and provide them with what they need insofar as the technological event. But I'm not going to go there. You can't, we can't have an Echo guy on without talking a little bit about Sonnet.
Yeah.
So a lot of brokers accuse Economical of competing against them with Sonnet. So are you competing against us with Sonnet? And I love the Sonnet commercials. You know, the guy who's like, honey, what are you doing? I'm measuring off to the fire hydrant. You know, it's all about insurance without questions. So my part B to the Sonnet question is, when are you going to not ask the questions of insurance professionals like brokers if you won't ask the questions of the public?
I think what you're trying to say, Steve, is the questions are a lot less for a Sonnet client than a broker client. Is that what you're trying to say?
Yeah, exactly.
Yeah. So let me address those in turn. And so, you know, I'm not sure I would agree fully with your comment that a lot of brokers are accusing us of competing. We certainly hear concerns. Initially, there were concerns, and it wasn't so accusatory so much as tell me how and why would you be doing this? And I think most brokers completely understood that. You know, this is a distribution industry, and many competitors are hedging bets on direct, intermediate, and broker-owned distribution. So we felt, we felt we were starting to fall behind, and we didn't like that direct companies, some of our direct competitor companies, were taking pieces of business out of the marketplace. These were individuals who didn't value the advice the way they probably should. They didn't want to pay for the advice that a broker can offer. They wanted a digital-only experience. And so we wanted to be able to provide that option for them. I do think it's a different subset of customers. The bigger question is, does that subset converge in the future as everyone becomes more familiar? But certainly at the initial instance, it was quite a different customer, a very vanilla type risk, much more digitally savvy. They were marketing very much to millennials, urban millennials. And you can imagine what kind of mix of business we got as a result of that marketing. So it was very distinct and quite different from the broker channel. It didn't have the same level of limits available. Certainly at the time didn't, all the extra things that brokers need to provide advice on, that was not something you could buy in the Sonnet channel. So from that perspective, we were comfortable from having a different target. In terms of over time, there's lots of advantages that I think we're bringing from that, because it was, start up from $1. And so it was an opportunity for us to learn and then deploy that to the benefit of the brokers. So as I mentioned earlier, one of the big learnings was automated underwriting. We have deployed that, and that's the root of Vyne and what's enabled us to provide that service to brokers on the Vyne side. The other was adding the third-party data set. So what allowed us to ask fewer questions on Sonnet is actually allowing us to ask fewer questions on the Vyne side as well. And over time, we continue to supplement that so that, one of the things we did is we pre-filled the data for brokers with third-party data. And that, in theory, makes it easier for brokers to transact. Now, we have allowed brokers to override that value because we think you have the greatest expertise. So if a third-party provider provides a certain amount of information, you guys usually have better information and we'll take that. On the Sonnet side, we don't have that. We have to 100% rely on the validity of third-party data. In many cases, it's out of date. So on a portfolio basis, it may be accurate, but on an individual basis, we're taking quite a bit more risk in some cases on that side. So it continues to be an evolving issue. Some of the marketing, some of the investments we've made in fraud analytics, for example, we brought through on the Vyne side. And so we'll continue to use it as a bit of an innovation mechanism and give the stuff that works to the broker side. And then lastly, the other big piece is, can we provide some of that digital capability to our brokers? And that's part of the roadmap, is that how can we enable brokers to provide a digital experience to their customers. And so the broker channel can compete with the direct channel in Canada.
I'm glad you mentioned that, because that's the most important piece of it. I think that we really do want those customers, and I think that those customers want to deal with us. We just can't deliver to them that experience that they're looking for. But I think that we're getting there. So
I think that's good. Like, we're getting the benefits of the learning. Just the biggest problem we run into in the digital world, and everybody here in the call is very digitally savvy. But one of the challenges we have is just the price gap with what we run into a lot of these digital clients where it's not 5 or 8%. We get into 15 to 25%. I'm not sure what it's supposed to be, but do you see a more than 10-point expense difference between Sonnet and the broker?
Definitely the direct channel as a channel, not necessarily the Sonnet Echo specific information, but just as a channel, direct channels tend to have a lower expense ratio. But then they tend to also charge a tiny bit less, so their loss ratio ends up being very similar between the two channels. I don't think I would say that all of that pricing difference was deliberate. Certainly, we've been through a period of rapid price increases on the Sonnet side, and it was really inadequate. And part of what I've been helping the team with is get us as rapidly as possible to adequacy. And of course, you can never go as fast as you want because the regulators will put caps on it. But certainly, I think you will see over time it'll get much closer.
We've seen that gap close really quickly in our jurisdiction. It was huge to begin with, and it has come quite close now.
Yeah, and part of it, I'll give you one example. Part of it's that third-party data provision that I mentioned earlier. And so if you have a third-party piece of data that says your house is valued at $400,000, and then we write it at that, we price it at that, and then we realize it's actually $700,000 because a year ago they did massive renos and nobody knew about it. This is something a broker would know, but we only know about it after the fact. And so if you're competing against the quote, you'll look at it. That's something we need to correct. That is not intentional, and we don't want to keep fighting it that way.
No, so when you talk about the cost base being lower, does that take into account the marketing side and the sort of the whole operating of call center or people to both service and run TV ads on it as well?
It does.
Oh.
Yeah, and again, I'm talking industry, not Sonnet specific. So if you look at industry direct, the model is built around having an expense ratio advantage. But then that's made up for a little bit, as you say, with marketing costs. And then also so if you have a 5-point expense ratio advantage, you can afford to have rates 5 points cheaper, as an example. Your loss ratio ends up being the same.
Applied announced they're going to have a quote bind and issue solution starting in January of next year in Quebec. And Sonnet, actually, Economical, I think if I look back, you're one of the first people ever to have that prior to you being at the company. But there was a pilot project probably in 2014 or 2015 where that happened. With your experience in Sonnet, would you be interested in providing a quote bind and issue solution where a broker had no interaction similar to Sonnet? Is that something that would be an option in 2021, or is that further down the horizon?
Yeah. We've explored it, and what's really interesting is some of the learning from this is actually where we've had some digital brokers that connected up through Vyne. We actually had some pretty poor loss experience because it was a straight through, and so then we were relying on the customer to be honest or accurate.
Yeah.
And so it really shows the value of the broker knowing their customer and being that frontline underwriter to that business. So we will encourage it, but as we've learned through the Sonnet side, fraud analytics have to be that much greater. The controls have to be that much greater. The third-party validation has to be that much greater. It's just a different world.
And that's something that we talked. I met with you and Roger last summer. It was a great conversation, and Fabi was there too. But you mentioned about how you have analytics to detect if somebody's taking a policy, and you found somebody, I won't say what island, but from a certain island was buying a policy, right? And you're able to detect that and be able to tell that it was a fraudulent person trying to set it up because you could tell by the IP address and you had the analytics, right?
This is not easy. Digital direct is not easy. You need a lot more because people are more likely to lie to a machine than they are to lie to a person.
Yeah.
So Economical doesn't currently have any UBI or telematics solutions. Where are the short-term plans going with that one?
Oh, I'd love to have it as fast as I can get it in. I'd love to, but I think the Echo made the decision a number of years ago not to invest at that time. Since then, there are a number of things that have happened that have accelerated, I think, the interest in it. One, as I mentioned earlier, more and more consumers are willing to do things online. Two, a year ago, consumers would be pretty angry. A lot of them are angry if you say, we're going to follow you and track your driving behavior and your mileage. Now they're all clamoring for it, saying, my car's parked in the driveway, I should be getting a big discount. So do you have a product? And three, the regulators now are saying, we need to, Alberta just went forward with it. Ontario is looking to support it. A lot of the regulators are saying, we will support more advanced telematics or UBI programs. And so I think the time is right for it. This is one of those ones where I think if you're last in the game, you're going to get anti-selected. And so we are looking at it and very interested in exploring how that might work. But again, it's another level of technological investment. And as we talked about earlier, we got a stack up of things we got to do. We're still working on claims and then commercial, but UBI is on the radar.
So what if the broker was the conduit and was the caretaker of past history of UBI?
From a pure data perspective, we already entrust our brokers through contracts with validating the information you provide us around the customer. So whether that's on their underwriting factors or whether that's on their driving behavior, isn't it kind of the same thing?
So on the flip side, will you let me take your UBI data with my customer on their journey to another insurer? The UBI data ends at when you go from insurer to insurer. It has to be reestablished, and that's one of the problems with it.
It's probably because it's yet another one of these areas where people are trying to get competitive advantage, right?
Yeah.
If we had a normalization of UBI data, what are the factors that we track? The way we do on standardized application forms, then we'd probably have a contractual way of sharing that data. But given that every insurer is collecting slightly different information about driving behavior and defining it differently, that's probably what they want to maintain as their own IP. But I guess it depends. Do you see regulators converging upon an agreed set of characteristics for us to rate UBI on?
Yeah, I think so. I think it's coming.
It would.
Well,
yeah.
I think
Like
the US is going that way of some place about putting the data in the cloud and moving your data around. But there's a lot more solutions in the US, right, than Canada right now.
Yeah.
So and this is kind of reflecting back on the comment that we talked about Rowan making earlier. What do you see for the future of the broker channel, and what do you think a broker needs to do now to be, in thrive mode in 2025?
Customers are always going to need advice. Even ones who want to do everything digitally and who say, don't bother me, they're going to have life events that require advice. And so really the question for me is, how competitive can the broker channel be if it had the similar levels of digital interaction? Then what would a customer choose and why? And so I think the broker of the future will have to be digitally enabled to service the customers the way that customers want to be serviced, but be available for them for the advice giving, because it's a complex world and complex product. And as much as we try and simplify it, customers inherently don't understand nor care to understand the product until after the fact. So much as you get a piece of software and you have to read all this stuff to accept, nobody reads it. You just scroll down to the bottom, press accept, and then we act surprised after the fact when we've agreed to something. That's what insurance customers do, except the consequences are so severe. And you look at what's happening with pandemic, business interruption, the wordings really do matter, and what you've signed up for really does matter. And therefore, how do you automate that and yet still provide advice to a customer around pandemic cover, quake cover, flood cover, automated, self-driving vehicles? Things are getting more and more complex, and therefore more advice is required. So I think the future is going to be bigger brokers, fewer of them, more specialized, and then for the PI, the personal insurance kind of stuff, far more automated and digitized. And just like the travel agents, I think for the most part, the small mom and pops will struggle.
I want to know what the
guy.
definition of small mom and pop is.
It's not about, so there's a certain level of dollars so you can buy this stuff.
Yeah.
Right? Paul talked about that earlier. But
Yeah.
to me at that point, and Paul hit it right in the head, it's, can you serve your customer the way they want to be served? And to me, that talks about, your channels of communication with your customer. And you don't have to be a $100 million broker to be able to have multiple channels.
I think that a mom and pop shop, like Tom said, who's digitally savvy and can do the thing, as long as they have market support and the ability to provide choice, I think it's actually easier in a lot of circumstances for smaller organizations to get on board with really astute small vendors to be able to offer these super cool customer experience things that really large organizations have a tough time consuming and moving and integrating into workflows. I mean, being nimble and being able to pivot and try different things and fail fast really counts for something insofar as the growth and the ability to deliver that experience versus a giant brokerage that just can't. It takes a long time.
Yeah, and you're talking extremes, but I do think that I do think you need a certain ability to generate enough cash that you're willing to reinvest into your brokerage to take advantage of those digital and technological capabilities. And if you're too small to be able to spit out that cash, you're going to struggle. Like on the insurance company side, for example, we're a $3 billion company, almost a $3 billion company. And my fear is we're still a little too small. We need to get bigger. We need to grow to take advantage of the leverage opportunity available to us from deploying that capital in technology. So, and as I said before, the absent partnerships, and partnerships is probably the way to go, even for a company our size. The future for small brokers, for the larger insurance companies, we got to partner more and more because it's increasingly expensive to try and develop homegrown solutions.
Yeah.
That's all gone by the wayside. Everyone's trying to buy commercially available stuff that integrates. That's the key. The more we can purchase that, the more people do, the more it becomes financially viable for smaller companies to do so, and then it'll keep scaling down. As I said before, the question is a matter of timing. How long can the small broker survive without those investments, hoping to take advantage of that scale benefit that the industry has? So it's a bit of a race against time, I think.
A lot of brokers haven't been reinvesting their money. Like everybody in the call here has been reinvesting their profits back in to continue to learn and get better, right? But not everybody's been doing that. And some people are waiting around, well, eventually everybody will have it. Well, by the time everybody has it, it could be too late. And that's, you got to be very nimble and be able to turn on a dime.
That's one of the interesting things from my time at consulting. I could tell you that every single insurance company and brokerage that I met with, their strategy was fast follower.
Yeah.
Who are we following, right?
Right off the end of the cliff, right? Yeah, I know.
We were 10 years behind the banks, and we're behind the UK and the US. Like, who the hell are we following?
Who are we following? The blind leading the blind. What's the next year? Is there any big things on your horizon in the next 12 months, Paul? Anything that any other moonshots or anything massive that you guys are working on?
Yeah, I mean, there's the Canada's first ever mutual IPO. So we're gonna try that one on for size. That's a pretty big.
It's a bit of a moonshot.
It is, and I'm super excited. I mean, this is not easy stuff, and it's not an easy environment. Our board is very focused on innovation. Our executive team is very focused on innovation. So we're going to continue looking at the future to see how we can leapfrog. Incremental improvements are not going to get anyone there. We have to take some moonshot risks if we want to compete with other financial institutions. So we're going to do that. IPO is one mechanism that we're going to go through to enable us to take some bigger risks in the future. But it's an exciting way to go for us. I'm just putting the gas down on business generation. I think with the help of our brokers, we've gotten our pricing close enough that we think, let's do it. You guys need a steady provider that can provide you with, low touch, low friction workflows. We've got that. There will always be exceptions, But other than that, let's just drive forward and get this thing going. Particularly if we've got another round of pandemic hitting us, we got to help customers as we go.
I think some brokers are probably wondering what's going to change after the IPO. Like, you've sort of set things up as to what it will look like, at least we think so,
Yeah.
afterwards. But then what happens? Do you start to follow the patterns of other big Canadian IPOs insofar as those behaviors?
Well, I mean,
are you going to look any different?
Yeah, I mean, you look at the other big examples. It's the life cos, right? They were all mutual before they mutualized and became large, powerful players that had a global impact. And we you know, Intact's doing a great job on that. We want to be another one like that. We want to have that opportunity. Our intent is to get big and to be very focused on the Canadian marketplace. We have built a leadership team and a pattern of behavior as if we were already public and much larger. And so what you see from us now is what you will get from us post-IPO. What IPO does for us, it gives us access to debt instruments, it gives us access to capital, it gives us access to acquiring other organizations to help us grow that we're a little hampered with now. That's the main difference once we get to that size. We're hoping that brokers can continue to be partners and shareholders, you know, in our new entity as we go forward. But our intent is to grow. We've hit the accelerator and we want to keep growing. We want to double and triple the size of the company. That is our path. That's what we're all laser focused on. And we're going to do that with the help of our brokers. That's, you know, and you've seen that. You've helped us through the transformation. You knew it was tough sledding. We've got that behind us now. We've got CI profitable. We've got PI profitable. And let's go. Let's partner and make this thing happen.
So let me wind us down here a little bit, Paul. So I'm going to give you one last question here, and that's the one we usually end up with our guests here. What one problem would you fix with a magic wand?
God, there's so many. Where would you start? Climate change.
How about COVID?
The electoral college. I would change the electoral college in the U.S. That would be distracted driving. Maybe COVID weight gain when we're all sitting in our offices not moving. My God. There's so much, but you know, to be honest, if we bring it really back down to the insurance space, I would love for us to be, as I said at the outset, far more collaborative as an industry. I think we can be cooperative as opposed to competitive. You know, so the banks and the life insurance companies lead the way. If the banks, who are even more regulated than us, can work together for the betterment of the customer, why can't the insurance industry? Why can't we work on payment schemes? Like, why does billing have to be different for everyone? It's just nonsense. So if I could wave my wand, I would make us move much faster in that regard.
I think when Paul was younger and he got a birthday wish, he wished for more wishes.
Yeah. Absolutely. Unlimited wishes.
So we gotta plug our sponsors here. So I want to say thank you very much to Crew and to Gore, and also a shout out to our partner Wick. And so let's say, Paul, thank you very much for coming on the show. Much appreciated. Cheers.
Great job, Paul.
Cheers. Paul, we'll get you to give you the last thoughts here. So give you 30 to 60 seconds to close us out. Anything you want to say, go ahead.
Yeah, I mean, first and foremost, guys, thanks very much. I really appreciate you taking the time to invite me on. Thanks for the beer. It's much appreciated. It's nice to have a chat. This is one of the things that we need to do more and more. And this is the way that the industry, you know, got so good, and the pandemic has made it difficult. But I appreciate you guys using this opportunity, even by video, to stay connected. So good on you. I'm excited about the future for the insurance industry. We are one of those good, stable, necessary industries. And look at, even in the pandemic, look how we've managed to support customers and be a good, viable, you know, industry for employees. And so I'm very proud of that. We managed to be there when they needed us most. I think the future is bright and digital and technologically driven. And so the more we can work together to figure out how to accelerate our collective capabilities and compete with other industries in other countries, the better it'll be for all of us. And so I'm eager, to continue the journey with you guys, particularly as we individually go through our unique IPO situation and beyond. I think we've heard you loud and clear. You like us being a Canadian-owned company. You like us being a good, steady, long-term partner. That's what we want too. So I'm delighted to be part of it. And we're having fun. This is as tough as it is. I recognize this is a very difficult environment. I don't want to minimize that at all when I say I'm having fun, but I'm having fun in that it's a real challenge and we're solving problems. And that's a good place to be. So thanks again, guys.
That's great. Well, thank you very much, Paul. Appreciate your time.
All right, guys.
Thank you, Paul.
Good night.